Hey guys, good afternoon, everybody. Today is Monday, December 9th. It is 1:58 right now. Our scheduled mentoring session is at 2 o'clock. So I'm going to go ahead and set up this room real quick and we'll get started with day three of our futures trading mastery class. So it's got a few things here to update and we should be good to go. Same. And we are good to go here. So let me get this link sent out to you guys here in the premium. All right, link is being sent out. There we go. We are good to go here. All right, so I'll get a few moments for people to make their way in, and then we'll get started shortly. Also send this out via email too. I just realized I'm gonna add one more strategy here. So I'm gonna add the liquidity pushes there. I know it's a favorite for everyone. So I'm gonna go add that real quick. Trying to think if there's any other strategies here that there's one more that these will be this over here real quick. I'm gonna add a couple more strategies on here. So I update the market flow V2. Publish that. And let me get one more. So I'll refresh this. Let me just add one more here. And I will just add it towards the end. All right, we actually have a lot of stuff to cover today, which is fine. It's a lot of good stuff. So the directional stuff is like really where I shine at the most. So I think this will be really useful for a lot of you guys. All right, so let me go ahead and refresh this real quick. It looks like we are good to go here. So, all right, guys, good morning, everybody, or good afternoon, everybody. Today is Monday, December 9th. It is 2:04 right now. Our scheduled session for today was at 2 o'clock, so we're a little over. Um, Today is day 3 of the Futures Trading Mastery class. So for today, we're going to be covering strategy types. We'll do an overview of directional strategies, sideways strategies, and breakout strategies. And then from there, we're going to go more into detail with the directional strategies, specifically under Module 5. We have a lot of strategies here to cover, so I'm going to try to squeeze this in and get through it as quickly as possible. And then we can answer questions along the way. So for Module 5, we'll start off with Market Flow V2. Module 5.1, Momentum Pullback Scalp. Module 5.2, Breakout V3 Continuation, V1 Variation, Pivot Scalp, High-Low Scalp, Triple Confluence, and of course, the Liquidity Push. This is one of the favorites that people apply, specifically Jamie. She's one of the people who typically applies this, and she has a lot of success applying a specific strategy. So let's start off with this here. If you guys have any questions, feel free to hop into the chat. But again, guys, this is day 3 of the Futures Trading Mastery class. We're going to cover strategy types, and then we're going to go into the directional strategies right after. So let's get started. I know this is probably going to take a while, so I'm going to try to zoom through this as quickly and as efficiently as possible. So let's start off with strategy types. Okay, so strategy types. There are 3 main different types of strategy types that I typically apply. There's going to be different strategies that are kind of like intuitive. So like sometimes I'll cover directional strategies and I'll put them right here. So I'll say directional, or let's do this real quick. Trading strategy types. So we'll start off with directional strategies, and I'll kind of go in between with like how they sort of differ with regard to like say reversal strategies, because reversal strategies will typically fall within sideways strategies. It can be directional or sideways with reversal type strategies, because, and I'll show you for examples later, because sometimes price can be going in one direction, it can reverse the other way, and it just becomes a directional strategy in the opposite direction. Or in a sideways market, you'll see market going in a direction, it'll reverse up, and then it'll come right back down. So I don't want to put that in a separate category because it falls within these, but these are going to be the main ones that we'll be covering. So 3 main ones that we'll be looking at, 3 different strategy types: directional strategies, sideways strategies, and breakout strategies. So looking over here at module 4.0, it's going to be directional strategies. So with that said, typically, and I'll make this a little smaller. So these are the different types of strategies that you can apply. We'll start off with directional strategies. So for directional strategies, it's very simple. You're looking for price to move direction, right? So when you're looking for a directional strategy pattern, you're looking for price to either head to the downside like this, or you want to look for price to push to the upside like this. This is what makes it directional. We'll cover specific strategies for this in a few, but I just want to show you guys that's basically what you're looking for. So, you want to make sure that it's not always going to be very clean. Sometimes you'll get something like this, where it's like a really nice climb to the upside, or you'll get something like this sometimes, right? Or you'll get something that's like very extreme. something like that. So when you're looking for directional strategies, these are the patterns that you're looking for. You're looking for price to either climb to the upside, or you're going to look for price to climb in the opposite direction to the downside. That's a very basic overview of a directional strategy pattern. When you're looking for sideways strategies, you're going to be looking for price to be going sideways. So you'll be looking for price to do stuff like this. Possibly break to the downside, come back up, come back down, etc. So you might see stuff like this where price will go sideways, break below, sideways, break above, sideways, break below, sideways, etc. Another way to look at a sideways pattern is if market is going sideways. So say, for example, you get some sort of resistance and some sort of support, and then you see market go this way, right? Sometimes it's going to be clean like this. Sometimes it'll stay down here, come up here, come down here, come up here, come down, and break below, right? It's the same thing. It's just I drew a box here. So like the same pattern I drew earlier, consolidate, drop, consolidate, push up, consolidate, etc. I just drew a box here, so it's a lot more easier to see. So that's an example of a sideways strategy pattern. We'll have specific strategies for that as well. I typically don't like trading sideways strategies because you're kind of like flipping the coin, right? You're taking a gamble when you're trading sideways because you don't know when price is actually going to break out of it. Like sometimes price will be up here. Like for example, today's market price was up here, came down right here, came back up right here, came down the middle, and then eventually it started to break below. So again, that is an example of a sideways strategy pattern. And then lastly, looking at the breakout strategy pattern, this is where things kind of come into play together. So like typically what you'll see a lot of times is you'll see, a lot of people look at the AMD pattern. It's like a wick off pattern. It's basically accumulation, distribution, manipulation. So if you put all these together, it'll start to make a lot of sense because these are the type of market structures that typically appear in the market. It's usually, it goes from one to the other, and then it flips back to the other one. But at any given time, you're going to see these types of patterns in the market. And I'll show you some examples over here on the chart in a few, but I'm going to show you a pattern of a breakout. So a breakout, typically, the way that we use breakout is we try to take the breakout when market opens, right? So typically what happens is like market will kind of go back and forth a little bit. And then when we take the breakout on open, we look for that market's open at 6:30 and then spike to the upside, or vice versa. Same situation, price gets kind of tight and it breaks out to the downside, right? That's a breakout type strategy. But when you put all these together, this is what you'll see sometimes. You'll see a directional push. Price will go sideways. It'll break out, go sideways, break out, go sideways, and then move direction, right? These are like the main patterns that you want to look for in the market because the market's always going to be doing one of these three. So for me, I'm really good at directional entries. So like for me, I'm good at just being patient and just waiting for the entries to come up. I'm good at these two, breakout entries on open and directional entries. I'm not so great at sideways strategies. I can analyze them. And if you've watched my live sessions, I typically will call out like sideways entries, but I typically almost never take them because I just know that that's not what I'm good at. So, when you understand the overview of how these work, then you can figure out what is your trading style, right? Are you a directional trader? Are you a sideways trader? Are you a breakout trader? Most of the time, you're probably going to see sideways a lot of times. So like in between a lot of these movements, you're going to see a lot of sideways movement. Typically, the way that these come up is it'll start off with a breakout in the morning. This is what we've been taking for the most part. I think the breakouts, if you're able to really crunch the numbers and understand, win-loss ratios, risk reward, the breakouts probably work the best because you don't have to be on the charts all day. That's why I prefer to take breakouts versus sideways strategies and even sometimes directional entries. Because what happens lately, like during the summer, during the winter, is that the market's not very directional, right? Like for example, today we were on the market for like 2 hours. There was like nothing that came up directional wise. The market did start to move directional after we got off the live session, but for the most part, even though the breakout lost today, I was able to get in and out very quickly. I was like, okay, I'm in, lose a trade, fine, whatever. I'll wait for the next breakout tomorrow, and then I'll take that. Versus if you're trading these two, there's nothing wrong with trading these two. The only difference is that you have to be a lot more patient and you have to be able to understand market structure before you start taking any entries. So let me just show you real quick examples of these types of market structure. So looking at this right here, you can see that price is climbing to the downside, right? So when the market's moving like this and you get this type of market structure right here, what type of strategy are you going to be applying? You're going to be applying directional strategies, right? Because market's moving directional to the downside. Looking at this over here, so we have this over here marked up, and then now let's take a look at sideways markets. So let me clean this up, and so instead of moving this, I'm just going to move this over a little bit and see how things change. So now price is going sideways. What do you apply in this type of market? Sideways strategy, right? So right here, now I'm going to move this over a little bit. So I showed you what a directional strategy, what a directional market looks like, this right here. Then I showed you what a sideways market looks like, this right here. Let me show you what a breakout market looks like. So I'm just going to move this again over a little bit. And you can see I'm just moving it over by like a few minutes. Like you move over here, directional. You move over here, sideways. You move over here. And I'll move this over a little bit. So let's just go to this little area right here. So we went from directional, or we'll start backwards. So directional, sideways, and then what's this right here? This is breakout, right? And the reason for it being a breakout is because if you look over here, right before it, price was going sideways. So it's exactly what I showed you earlier. Price goes sideways, and then what happens after price goes sideways? It breaks out. What happens when it breaks out? It gets manipulated, it comes back down, right? What happens right here? Price goes sideways. And then what happens after it's sideways? Directional push. So you can see over here that if you can understand market structure, you can really understand like what to apply. So for me personally, when I'm trading during like market session times, I will typically just ignore this. When price is going sideways, you'll typically see me on the live session. I'm like, there's nothing to take here. Just hang out for a little bit, wait for something to come to you, because I don't like trading in these sideways markets. Like I said, it's easy to get trapped in these sideways markets. So I personally don't like entering, when stuff like this is happening. So for me personally, I just wait for this to pass. I'm like, okay, breakout happens to the upside. Then I look for the correction or I look for the continuation. Price corrects back down. And then over here, price goes sideways again. And then now when price starts to come down, I'm like, all right, cool. Now I'm going to start looking for some entries here, right? I look for that first confirmation. So I look at price to come down, retraces up. Then at this point, I'm like, okay, now I'm going to start looking for some entries because price is now coming back down and I can look for my directional entry. So you guys see how everything kind of makes sense here? It's like a storyline. You just have to understand market structure. If you can understand market structure and you can see how everything moves, you'll know exactly what to apply. You got to be proactive in the market. You can't just be like sitting there and just waiting for the trades to come to you. You have to be analyzing like, okay, what type of market are we in? Are we in a sideways market? If we're in a sideways market, then what's going to happen next? It's either going to break out or it's going to go directional, right? So, you just put two and two together. And then once you understand how to read market structure, you can kind of anticipate what's going to happen next. Because, so again, right here, let me just mark this up. So again, price went directional right here, right? And then after it's directional, what's the next thing that's going to happen? It's not going to be a breakout because you can't go from directional breakout. It'll typically go from directional into sideways, right? So let me give you let me mark up some examples here. I'm just going to put a list of so we'll say market transitions, directional to sideways, right? Breakout, directional, breakout to sideways, sideways to breakout, sideways to directional. So you guys understand how these market transitions work? So again, right here, directional into sideways, right? Market was directional right here, coming down, retrace coming down into a sideways market. That's an example right there. The other example, breakout into directional. So right here, price broke out to the upside. Or this isn't a good example. Let me see if I can find a better one. Looking to see where price broke out over here. Today, there wasn't really a good example for breakout into directional. Because every time it broke out, it just went sideways. Like the breakout happened right here, sideways, breakout, sideways, breakout. I guess this could be an example right here. So price broke out, and it's not a good example, but I just want to show you how it would typically look. So right here, and I'll just kind of show you how this happened. So this started off as a sideways to breakout. So market went sideways right here. This is sideways to breakout. This price went sideways and it broke out to the upside. And then now it went from breakout into directional. So from there up until here, price went sideways, breakout, and then now went directional to the downside. So you guys can see, if you guys are able to just chop things up and understand, okay, this is market structure, what's going to happen next? These are the market transitions from directional sideways. Like I said right here, price went directional, right? And then what happened after? Sideways. Directional sideways, breakout to directional, price broke out right here, then it went directional. Breakout to sideways, you can see over here, price broke. Here's another example of breakout to sideways. So these red candles right here, let me just take this off so you guys can have focus in this area. So see how price broke out right here? And then what happened next? Sideways. And then here's sideways to breakout. You had price going sideways right here. And then it breaks out to the upside. And then lastly, sideways into directional. See if I can find an example for that. It goes right here at the end. So market went sideways from right here. And then once it broke out of this low, and this is where the strategies will make sense, because I'm showing you guys like the market transitions. And then once you understand the directional strategies, sideways strategies, the breakout strategies, you're like, okay, if this happens, then what's going to follow next? Right here, price went sideways. And once it's done breaking this area, broke and closed below the sessions, that'd be a high-low scalp possible entry. And then you can see from there, it goes into a directional move. So you guys can see that, if you can understand the market structure, and if you watch my live sessions, I typically mark up the structure there so that you guys can have an idea and see what's happening. But this is basically what you're looking for. You're going to look for these, you're going to follow one of these types of strategies or multiple types of strategies. And then if you can understand the market transitions from directional to sideways, breakout to directional, breakout to sideways, sideways to breakout, sideways to directional, then you can understand what to look for next. So if market just broke out, you're like, okay, market just broke out. Now what do you want to look for? A directional confirmation or a sideways confirmation? If price is going sideways, you want to wait for that breakout or a directional push, right? So now that you guys have like a general idea of like the market types, the strategy types, and market transitions, now we can go into detail with regard to specific strategies. So if you guys have any questions regarding market transitions or trading strategy types, feel free to hop into the chat right now. Otherwise, we're going to start off with the first strategy, which is the market flow V2. After the market flow V2, we'll go over to the momentum pullback scalp, then breakout V3 continuation, then V1 variation, pivot scalp, high-low scalp, triple confluence, and then the liquidity push at the end. At the end, I'll show you how I mark up liquidity, and I'll show you how to take these entries for liquidity push. There's a lot of different ways to apply them. They all work fine. I'll show you the ways that I do it. I'll show you the ways that other people do it. There's just a lot of different ways to apply it. They all work perfectly fine. It just depends on your risk appetite. So let's see, no questions. All right, let's start off with the market flow V2. So module 5.0 over here. I will show you guys some examples over here of market flow V2s. I'll see if there's any entries that came up today. So I'm going to take off the sessions right now. I'm going to kind of identify and I'll let you guys know exactly what. So I'm just going to go and look at raw examples. And then once I'm done taking a look at the raw examples, then I'll show you guys some other confluences that you guys can use to avoid certain entries like red flags. So first things first, let me see if I can find one example here. Price retraces up. Looks like the entry could have happened right here. So I'm just going to replay to this specific candle. Let me go back by one more. Okay, so let's look at the market flow V2 here. So you don't need all of these indicators. The main indicators you need, and I'll just mark it up over here because, you know, realistically, you don't need every single indicator there. It'll help if you could have them on the chart, but it's not super necessary. So this is the market flow V2 strategy. So first, you want to confirm momentum. Or let's start off with this first. First, confirm trend using pivots and trend meter. It doesn't have to be both, but if you have both, it's going to be more ideal because you'll know exactly what direction to be trading in. So here, let me start over real quick. I'm going to put the indicators that you need. So required indicators for market flow V2 strategy. It's a little smaller. It's a little smaller. All right, so the required indicators. First, you'll need momentum indicator. 2, you'll need pivots indicator. Or I'll just put in both. Trend meter. And I think that's it. And MPS levels indicator. This is optional. It's not necessary because you can just look at the numbers, but the levels indicator does help because you can just identify where the levels are without having to actually, you know, put up the indicator on there. But I'll show you exactly how it's done. So, all right, starting with this here, these are the required indicators for the market flow V2 strategy. You'll need the momentum indicator to identify momentum. You'll need the pivots indicator to identify the retracement and direction of the trend. You'll need the trend meter to identify the direction of the trend as well. And you'll need the MPS levels indicator to identify the levels. You don't need it, but it's going to help a lot when you just have the levels marked up there rather than having to, you know, pull it up yourself. But again, you don't need it. If it's too messy for you, you can just do it without it. So let's start off first with the momentum indicator. The momentum indicator is going to be these vertical lines right here, or these vertical bars. So basically these red and green bars that go up and down. This is the momentum indicator. The pivots indicator are going to be these 4 lines here. This is going to identify direction of trend and also where price is likely to bounce off of. The trend meter is going to be down below right here. This is going to show you the direction of the trend for this specific time frame. The settings for the trend meter are going to be at chart if you're going to be scalping with this, so that you can know what the direction of the trend is for this specific time frame. And then lastly, the MPS levels indicator is going to be, it's just going to mark up specific levels on the chart, like number levels, price points. It's not necessary. It's It's used to make things a little more efficient when you're looking for specific price levels, but realistically, you can just eyeball where is the closest whole number. So looking at the strategy over here, I'm going to now mark up the requirements. So first, you want to confirm the trend using the pivots in the trend meter. Second, you want to confirm momentum in direction of trend. Third, you want to confirm price retracement to level 1 pivot. Or set pending limit order in direction of trend at nearest whole number between pivots smaller. And lastly, TP stop loss set to 1-to-1, or you can do 1-to-2. I mean, it's just really up to you. There's set to 30-30 or preference. So I mean, it's just really up to preference, guys. However you guys want to take it. Again, it's, you know, everyone's different. Some people like to do positive risk reward. Some people like to do negative. Some people like to do 1-to-1. It's just really up to preference. No. Best possible trade scenario. All right, so I think I have everything covered right here. I'm also going to save this. I'll put a date here so I know when I updated this. Okay, so looking at the criteria here, you're going to need the momentum indicator, the pivots indicator, the trend meter, and the MPS levels indicator. It's not required, but again, it's optional and it's preferred if necessary. Now looking at the criteria here, first you want to confirm the trend using the pivots and the trend meter. So in order to confirm that, you want to identify whether price is below the pivots or above the pivots. Whenever price is below the pivots, typically price is trending to the downside. When price is above the pivots, it's typically trending to the upside, right? So right here, you can see prices below the pivots and the trend meter is red. With that said, you can pretty much assume that price here is bearish with regard to the trend. Once you confirm the trend with step 1, you move on to step 2. Step 2, you want to confirm momentum in the direction of the trend. So you can see over here, we have a bearish momentum, right? A sell signal. Once you've confirmed this right here, you have requirements 1 and 2 met. You have a bearish trend and you have bearish momentum. Going to step 3, you want to confirm a price retracement to level 1 pivot. So you can see here, price is pushing to the upside to level 1 pivot. These pivots over here are color coded by level. So your color might be different. You know, some people just use different colors. For me, I just have it colored to the way that I like to see. Green is level 1 for me. Blue is level 2. Level 3 is orange and level 4 is red. So again, you can set these colors to whatever you like. If you go into the settings, you can change them to whatever color you like. This is just what works for me. So this is why I leave it at. So again, step 1, bearish trend. Step 2, bearish momentum. Step 3, confirm price retracement. You can see our price comes down. It retraces up to the pivots. And that's going to be step 3. Now, once you have it set up right here, you go to step 4, where it says set pending limit order in the direction of the trend at the nearest whole number between pivot levels 1 and 2. So like I said, these are pivot levels 1 and 2. If you look over here, the closest whole number is 44,590, right? Because the next one's going to be up here, 44,600. This is above the pivots. And then 44,580 is going to be way down here. So the closest number is going to be right here, right down the middle. You're going to put a pending order for a sell right there. So what you're hoping for and what you're anticipating is you're looking for price here to, push up, fill your order, and then come down to TP. That's literally what you're looking for. This is the pattern you're looking for here. That's why you want to identify trends. When price does retrace up, it's going to continue back down in the direction of the trend. This is why you use this during directional markets. So right here, if you have this set up, again, your TP stop loss can be set to 30-30, or for preference, if you want to do a positive risk reward, you can do a 30 TP and you can do a 15 stop loss. It's just really up to preference. And then again, you want to avoid red flags if possible. So here's the setup. We'll let for the chart move here. You can see how price pushes up. It's now filled at this point, right? Because you have your pending order just hanging out there. Once it fills, you're now in the position. At this point, you're going to be waiting for price to push back down in the direction of the trend and hit your TP. So we let this move a little bit. Price comes up a little bit, comes lower, and you can see right there it hits full TP. So there goes an example of a market flow V2. Very simple, very straightforward. This is like one of the main strategies we apply during the live sessions. And there goes an example right there. I'll see if I can find another one here, but I don't see anything here. So there's another one here. Typically, let me go again over here. Typically, I like to use one per momentum. You don't have to. You can take as many as you like. Sometimes we're in a heavy trend market, and you can just take a bunch of them within one momentum. So again, right here, it looks like we're going to have another setup. So same criteria, same requirements. You already know the indicators. Again, let's look at the requirements again. Confirm the trend. It's still bearish here. Price is below the pivots. The trend meter is red. Everything lines up. So that's going to be step one. Step two, confirm the direction of momentum. We have a sell momentum right here. Same thing. It's like nothing's changed very much. Step three, confirm price retracement to level one pivot. You can see price came down and then it pushed right back up right here. Step four, you're going to place a pending order at the whole number. So the whole number is going to be right here at the 580 mark. Same thing. If you want to set it to 30-30, you can set it to 30-30 for a 1-to-1. If you want to have a tighter stop loss, you can set that to 15. You can set it to 20. You can set it to whatever you like, right? Whatever you feel comfortable with, set it to that. And then once you have this set up right here, same situation. You look for price to push up. You can see right here that the order got filled again. And now you're going to look for it to come back down. And another full TP right there for market flow V2. It's the same exact pattern. Again, it's really up to your preference if you want to go for a bigger TP, bigger stop loss, but this is how the setup works. For me, typically, I have a trailing stop that will follow it at 10 points. You don't have to do that. It's just really up to your preference. If you want to just let the trade run to full TP, you can do that. It's probably going to work out better that way. But again, it's just really up to preference. Everybody has their own preference. Some people like to get in and out of the position very quickly, so they use a trailing stop. Some people want to hold on to it for the full move and get that full TP. So there goes an example of the market flow V2. If you guys have any questions regarding this, feel free to hop into the chat now. Otherwise, we are going to move on to the next strategy, which will be the momentum pullback scalp. You'll see that with this strategy, it's like almost the same, like pretty much. The only difference is that you're not using the pivots for entry point. You're just going to look at the nearest whole number. So, all right, if you guys have any questions regarding that, feel free to hop into the chat. Otherwise, we'll move on to the next strategy. All right, no questions. So let's move on to the next strategy, which is the MPS, momentum pullback scalp. The momentum pullback scalp came first. This was like this was a strategy that followed it. So basically, it's pretty much the same strategy. The only difference is entry price point. Because what happens sometimes with the MPS is that the entry would sometimes happen a little too early, where it would you just get in a little too early. So let me see if I could find one here. I mean, it's pretty much going to line up exactly with the other one. So let me see if I could. Well, it's going to be the same example. So let's just go over here real quick. So, and you'll see the difference between the two. I think the market flow V2 actually had better entry because you'll wait for it to retrace up a little higher, but for the most part, it's pretty much the same thing. So let me go over here again, and I'll put required indicators for momentum pullback scalp strategy. And it's going to be the same exact indicators, except for this one. No, it's pretty much the same thing. You just don't need to use them for the same criteria, but it's pretty much the same thing. So first, you're going to look for you need the momentum indicator, of course, pivots indicator, trend meter. I mean, that's about it. MPS levels indicator, optional. So same exact indicators that were used for market flow V2. Now I'll go over the criteria. The criteria is going to be a bit different. So this is the momentum pullback scalp MPS strategy. So first you want to confirm direction of momentum. Confirm direction of the trend. Confirm retracement candle. Set pending limit order, direction of trend, and momentum. Add whole number. I'm just going to put it part of it. So pending limit order cannot be passed. Momentum signal. Set to 30-30 for preference. No, avoid red flags for best possible setup. Okay, so I think that's about it. So looking at this here, I think this is, and let me just put this could be a momentum pullback scalp. I'll put the date here so I know when I put this criteria up. Okay, so looking at this strategy here, it looks very, very similar to the momentum very similar to the market flow V2. The only difference is that you're not using pivots to identify the entry point. So first, you want to confirm the direction of momentum. Right here, we have a sell momentum. Second, you want to confirm the direction of the trend using the pivots in the trend meter. Again, like I said earlier, if price is below the pivots, ideally it's going to be in a bearish trend. And if price is above the pivots like here, it's going to be in a bullish trend. You can kind of just match these up. If price is above the pivots and the trend meter is green, then you can identify and assume that the trend is bullish. Vice versa, if price is below the pivots and the trend meter is red, you can assume that the trend here is bearish. So again, step one, confirm direction of momentum. Momentum here is bearish. Step two, confirm direction of trend using the pivots in the trend meter. You can see price here is below the pivots, the trend meter is red. Step three, you want to confirm a retracement candle. By retracement candle, you just want to look for a candle in the opposite direction. So you can see over here, price is coming down in the direction of the trend. We have one green candle right here. This is considered a retracement candle. Once you confirm that right there, you now want to set your pending limit order in the direction of the trend and momentum at the, I'll put nearest whole number. Okay, so let's just go over the requirements again one more time. Bearish momentum, step one. Direction of trend bearish, step two. Step three, confirm retracement candle. Price was coming down. The retracement candle is going to be right here at this green candle. Step four, set a pending limit order in direction of the trend and momentum at the nearest whole number. So price here is retracing up. You can see this candle closed at 44,576. The next whole number is going to be right here at the 580 mark. If you guys want to use the levels indicator, again, you guys can use that. If you guys don't want to use that, then you can just look at whatever the closest number is, which is right here at 580. Once you have that set up, you can set up your TP stop loss right here. Again, if you want to have it set to a 1-to-1, 30-30, that's completely fine. If you want to have it to a 1-to-2, you can do that as well. It's just really up to preference. Once you have the setup right here, you can now look for you'll look for the price to push up, fill your order, and then come back down. Right, so again, right here, same situation. Price pushes up, it now fills the order right here. At that point, you're going to look for price to come back down. It does right there. See, it takes a little bit longer to hit, but eventually it does come back down and hit. So you guys can see the differences and the similarities to the market flow V2. It's basically the same strategy. The only difference here is that your entry time is slightly different. So for the market flow V2, the entry was actually up here at a better price entry at the 90 mark, right? So right here, you have gotten in a little earlier, but it would have the same outcome. Price would still hit TP. So that's why I was saying in the past, guys, like it doesn't matter which strategy you apply because they're going to line up with each other most of the time. So if you go for market flow V2, it's probably going to line up with the momentum pullback scalp. If you take a momentum pullback scalp, it's probably going to line up with the market flow V2. The only difference here is that the entry prices are at different price points. This was at the 80, the market flow V2 is at the 90. So they go hand in hand. It's just up to you. What do you like to apply, right? Do you want to get in earlier? Do you want to get in later? Because sometimes you're going to miss the entry if you're taking a market flow V2, but you'll have better entry when you're getting in. It's going to be like a snipe entry because in a situation like that, you're going to be getting in at a farther price point versus a closer one. When you are looking at the specific entry points. So, all right, guys, I think that's it for this specific strategy. If you guys want to see another example of the MPS, feel free to hop into the chat. Otherwise, we'll be moving on to the next strategy, which is the breakout V3 continuation. Viv is asking, will I show the breakout at open? Not today, Viv. We're going over module 5. Breakouts are until module 7, so it's not going to be covered today. We're already almost an hour into this session, so we're probably not going to have enough time to get through all the directional strategies, the sideways strategies, and down to the breakout. So no breakouts for today. We're probably just going to be covering the directional strategies. We still have a lot of strategies here to cover. And then next week, we'll cover the sideways strategies. And if we have more time, we'll cover the breakouts with that. Otherwise, we'll probably keep these to separate days. But yeah, we're not going to get down to the breakouts today. So, all right, guys, no questions here. We're going to move on to the next strategy, which is the breakout V3 continuation. So let me clean this up. And then, so again, we had an entry that was just right here, right? We're going to have another breakout V3 continuation, like literally right here. So like I said earlier, guys, a lot of these strategies, they line up with each other. They're not very different. You're going to have entries kind of follow up with each other. So depending on like what strategy you're looking to apply, a lot of these are going to line up together in the same area. So here goes an example of the breakout V3 continuation. I'll see if there's another example here. I don't think there was very many. I don't think there was any that came up today, really, at least not during the live session time. And I don't see any breakout V3 continuations over here either. There's one like right here, but the volatility was kind of flat. I was at 8 o'clock when I got off the live session. So we'll use this one right here because this is a better example. Let me go over here again. I'll put the required indicators for breakout V3 continuation strategy. So first, of course, it's going to be like pretty much the same thing. Like you're always going to need the momentum indicator for the most part because the momentum indicator is the main catalyst for most of the entries. The pivots indicator, of course, because you use this to identify the trend meter to identify the trend. And I think that's about it. There's not really much else. I mean, you guys can have the other indicators up, but realistically for this specific strategy, it's a very simple, straightforward strategy. This is probably one of the easiest ones to follow because it's really hard to screw it up. You're just looking for colors to match. This one requires probably the least amount of work, and this is one of the favorites for a lot of people as well. I know William, this is like one of his favorite strategies. He was using this and he passed a bunch of challenges doing this and evals, and he got funded and paid out and all that just by applying this one strategy. So if you've been a part of the group for a while, you'll notice that certain people in the group follow they follow one or two specific strategies, and that's all they do. You know, like Jamie applies the liquidity push. That's pretty much it. And then William only applied the breakout V3 continuation. He did great doing that. You know, Kip applies a pivot scalp, and that's all he does, and he kills it with that. So it's just really up to it's really up to your preference, guys, of like whatever you're looking to apply. I would recommend just following and sticking to one or two of these strategies. I know you're going to get kind of bored sometimes because the entries are not always going to come up, but if you can just focus on one strategy, get really good at that strategy, you can make a lot of money just doing that. Like you guys have seen from the live sessions, I really mainly take the breakout. That's like all I really take because I don't want to be on the charts all day. Obviously you can be on the charts longer and you can take a lot of these different entries, but for the most part, I'll probably just take the breakout and then I'll probably look for some breakout V3 continuations, maybe some market flows if the market's actually flowing, but if not, then for the most part, it's usually just breakout V3 continuation and the breakout strategy. So, you know, you don't need to have like a crazy, I mean, you can make more profit if you have more strategies to follow, but for the most part, it's not really necessary because if you're following too many things, it puts you in more risk to lose trades as well. So here we go with the breakout V3 continuation. Sometimes it's short for BB3C strategy. So first requirement is confirm momentum signal. Confirm trend using pivots and trend meter in direction of momentum. Or down this a little bit. Confirm trend using pivots and trend meter in direction of momentum. Third, confirm candle following momentum signal matches momentum. Fourth, enter on the close of that following candle. 5, TP stop loss set to 30-30 or preference. Again, it's just really up to preference. Note, avoid red flags or best possible trade setup. And we'll go over the red flags a little later. I don't think it's really necessary now because we're just covering the strategy. Once you start to incorporate the red flags, that's where things get a little confusing because you're not sure which one to take, but that's just an additive at a later time. So looking at the breakout V3 continuation, the first requirement is you want to confirm a momentum signal. You can see right here, we have a sell signal. This means that we're going to be looking for a sell. Second, you want to confirm the trend using the pivots in the trend meter. Trend meter are in the direction of momentum. So you can see over here, prices below the pivots. The pivots are angling down, trend meter is red, pivots are angling in the same direction as this. So you can see here that we're looking for a sell with regard to momentum. And then you can see here that prices below the pivots and the trend meter is red. So you can assume that the trend here is bearish, right? So you'll see the same concept applied with every strategy, basically. Like you want to be looking for the direction of trend and you want to be looking for the direction of momentum and you want to make sure that price is going in that direction. So you have, you know, a really good confluence that even if you make a mistake, price is probably going to push in your direction. Like you can enter at any point in time, and even though you make a mistake and it's still for a sell, you know, the price is still going in your direction. Like price could retrace up, but for the most part, even if it retraces up, it'll probably come back down in your direction. That's why these are considered directional strategies. So again, step one, confirm momentum signal, sell signal right here. Confirm trend using pivots and trend meter in the direction of momentum. You can see that the trend here is bearish. Step 3, you want to confirm that the candle following the momentum signal matches momentum. So for example, if you have a sell signal right here, you want to make sure that the candle following it is a red candle. Vice versa, if you have a green signal right here, you want to confirm that the candle following it is a green candle. Again, right here, red candle, red signal, red candle, green signal, red candle. This doesn't match, right? So this wouldn't be a setup. But again, right here, all the criteria is met. Momentum signal for a sell, bearish trend. We have a following candle, which is red, matching the momentum. You can enter on the close of that following candle for a sell right here. You can set your TP stop loss. Again, if you want a 30-30, that's perfectly fine. If you want to have it tighter, you can do 30-15, 1 to 2. Once you have the setup right here, you let the trade run. You can see there that it's filled. It's coming down. And you can see it hits full TP right there. So you can see how this entry over here overlaps with the market flow V2 and it overlaps with the MPS entry. So like I said, it doesn't matter which strategy you're looking at. You could have taken any of these 3 strategies right here. It would have hit your TP regardless of the fact. So that's why I say focus on one strategy, because whether you take a market flow V2 or an MPS or a breakout V3 continuation, your TP is going to get hit for the most part, right? If the market's flowing in your direction and it's like doing what it needs to do in a directional market, then it's going to hit your target. So like, this is why I say don't like put too much stress on like knowing every single strategy, because if you just take one of these, either one would have hit your TP. And then the good thing with this here is that, say for example, you were in this position, right? And then you see price retracing back like this, back to your entry point, and you're like, okay, this might look bad because price looks like it might be pushing back up. However, you can see there's a market flow V2 here. So you're like, okay, I feel comfortable with this because this trade is going to move in confluence with mine. So odds of it coming down hard right here are very likely. And that's exactly what happens, right? So you can use these strategies as a confluence. You don't have to take all 3. You can take one and then use the other strategies as a confluence to your entry. So there goes an example of the breakout V3 continuation. If you guys have any more questions regarding this, feel free to hop into the chat. Otherwise, we'll be moving on to the next strategy, which is a V1 variation. Again, I'm going to try to speed through these strategies, guys, because we don't really have much time today, and there's a lot of strategies here to cover. Of course, in the future, we can cover these more in detail, but I'm going to try to speed through these because I know the liquidity push is probably going to take a while to cover. But a lot of these strategies are just going to line up with like every following entry, because they're pretty much the same thing. The only difference here is that they're entering at different points. So there goes the breakdown of the breakout V3 continuation BV3C strategy. I'm gonna clean this up, and I will now show you guys an example of the V1 variation. So let's see if we find one here. I don't know if there was one today, but see if I can find one here. All right, perfect. There's actually one that's right here. Market volatility kind of died down here. It's towards the end of the session, but actually, I take that back. It's not a good entry because this candle is pushing up. Okay, right here. Actually, no, this is not a good one here either, because this is there's no pending momentum. Okay, I think there was one right here. Yeah, the volatility wasn't very high, so it's a little hard to identify these, but this looks like probably the only one that came up that was like actually within criteria. There's probably another one right here. Volatility was dead around that time. We'll just use that example because I don't think there was any, I don't see any other V1 variations that came up through here. If I see any more, then we'll take another look. But for the most part, I think that's the only one. There's another one right here, actually. This is when the volatility was a little bit higher. So we'll use this one, actually. I'll just show you an example right here. You're looking for this pattern. You're looking for a double body rejection. But I think this one's a little messier because there's momentum on the previous candle. This one over here is a lot cleaner because it's just a setup, like a pure setup. And it happened when the volatility was higher at 8 o'clock. Okay, so this is going to be an example of the V1 variation strategy. Let me go over here real quick. required indicators for V1 variation strategy. So one, momentum indicator. Two, pivots indicator. Trend meter indicator. High-low indicator, and that's pretty much it. Here, this is the V1 variation strategy. First, confirm double body rejection, double body, double wick rejection off high-low. Second, confirm price moving in direction trend using pivots, trend meter. Confirm pending momentum and direction of trend. Fourth, enter on close of following double body, double wick candle, TP stop loss set to 30-30 or preference. No, avoid red flags or best possible trade setup. So you'll see here, I mean, it's very similar. Like the criteria is always very similar. The only different catalyst with this is instead of looking for momentum, you're going to be looking for a reversal pattern. Let me put the criteria here. And I forgot if I saved the last one. It's okay. I'll redo it again later. Okay, so here are the requirements for the V1 variation strategy. So first requirement is you want to confirm a double body or double wick rejection off the high-low. So right here, you can see there's a high point right here using the high-low indicator, and you can see that there is a double body rejection. A double body rejection means that you have price rejecting off the same exact body right there. So that means it's a double body because it's on the same exact level. A double wick is when there's two wicks that are on the same level as well. I'll see if I can find an example here. I don't think there's going to be one today. Yeah, I don't see any example here for a double wick. I wish I could show you, but there's just no examples here. The market just hasn't been very smooth for the most part. But basically, so the gist of it is you're looking for either a double body or you're looking for, actually there's one right here. So here's an example of a double wick. It's just not on the high-low. So the high-low is actually on the top end right here. But if you look at these two candles that are right next to each other, you can see how the wicks are like right exactly on the same price point right there. So you're either looking for a double body rejection like this or a double wick rejection. Those are that's a catalyst that you're looking for this entry. So going back over here, first requirement, you want to confirm a double body rejection or a double wick rejection off a high-low. You can see how we have a high right here, double body rejection. That's going to be step one. Once you pass step one, you're going to go to step two, confirm price moving in the direction of the trend using the pivots in the trend meter. Again, over here, you can see prices below the pivots. The trend meter is red. This is going to identify as a bearish trend because price is below the pivots and the trend meter here is bearish. You can see our price is retracing up. Doesn't necessarily mean price is going to reverse, but it is retracing up to the pivots. However, price was already below the pivots here. And this indicates that price is in a bearish trend. So step one, confirm the double body or double wick rejection, which is right here. Step two, confirm price is moving in the direction of the trend using the pivots in the trend meter. So price is moving bearish. Step three, confirm that there is a pending momentum in the direction of the trend. In order to identify a pending momentum, you just need to look back at what the previous momentum was. So right here, we have a buy momentum, right? What comes after a buy momentum is a sell momentum. It only goes in opposite directions. So you can see over here, we had a buy momentum, sell momentum, buy momentum, sell momentum, buy momentum, sell, buy, sell, etc. Right here, we have a buy momentum. So what's going to be the next momentum here? It's going to have to be a sell, right? So with that said, you've confirmed step 3, confirm pending momentum in the direction of the trend. Since the trend here is bearish, you're looking for a sell momentum, which is pending. And since we have a buy momentum over here, the next momentum has to be a sell because they don't double up. You're not going to get buy, or sell. You're going to get a buy, sell, buy. So with that said, that's what you're looking for. Step 1, confirm a double body or double wick rejection, which is right here. Step 2, confirm that price is moving in the direction of the trend. The trend here is bearish, or price is moving in that direction. Step 3, you want to confirm a pending momentum in the direction of the trend. So again, you have a buy momentum here. Next momentum has to be a sell. So that's what's going to be pending. Step 4, you're going to enter on the close of the following double body, double wick candle. So right here, we have a push to the upside. The candle right here, right next to it, is a double body. So as soon as this candle here closes red, you would enter a sell position right here. Again, like I said earlier, your TP stop loss could be 30-30, or if you want to do a positive risk to reward, you can do a 30-15. You know, it's just really up to preference. Once you have that set up right there, you let the trade run. You can see the trade is now active. Price pushes down and eventually hits TP. So this is the reason why you're looking for a pending momentum, because you want to catch the trade before the momentum comes in, right? Like I said earlier, it goes from buy to sell, sell to buy. So we have a reversal pattern here. Again, the reason why we're looking for this double body rejection is because this double body rejection or double wick rejection tends to be a reversal pattern. So you can see how price came down, came up, came down, came up. And when it came right here, there's a double body rejection right there, right? So what's to happen after that, or what's likely to happen, is a reversal to the downside. And not really a reversal, but more so a continuation, because this is why you want to look for the trend. And this is why these are directional strategies, because you know the direction of the trend here, which is bearish. So you know that if price pushes up and you get a double body rejection, and if it's rejecting off pivots or any type of structure, odds of this coming back down are very likely. So whenever we take trades, you guys can see that all these directional entries, we're really basing our entries to move with the wave of market. So we want to move with the flow of market, right? We're looking for these types of market conditions because we're just looking for price to retrace up, give me a V1 variation right there, and then write it down lower. So it's very simple, very straightforward. Again, this is a V1 variation strategy. This is another one of the main strategies that I apply. I typically only apply like a few of them. So like I'll look for sometimes market flow V2 if the market's flowing. If the market's not flowing very well, I'll look for breakout V3 continuations, and then I'll look for V1 variation. So like basically these are the 3 main strategies that I'm looking at. Market flow V2, breakout V3 continuation, and V1 variation. And then of course the breakout every morning. So there goes an example of a V1 variation. If you guys have any questions regarding that, feel free to hop into the chat. Again, like I said, there's not very many examples of V1 variations because the market wasn't moving very directional for today. This is pretty much the main one that I saw on the chart. But if we go back to days where the market's moving a lot more directional, there's going to be more examples there. But there goes the example for the V1 variation strategy. Now that we've covered this, next strategy on the list, if you guys don't have any questions, we're going to move on to the pivot scalp. This one is, again, super, super simple and super, super straightforward. So I'll look for one here. I think the same entry is going to happen like, I mean, there's a couple entries here. We could either use that same one that we just looked at right now, or we can use a different one. I mean, there's a whole bunch over here. I'll just use whatever is closest. So we'll go over here. This one over here is very similar to a lot of the other strategies, but again, this one is the catalyst is going to be the momentum signal. So I don't see any questions. We're going to move on to the pivot scalp entry or pivot scalp strategy. So looking at this here, required indicators for pivot scalp strategy. So you're going to use the momentum indicator again. You're going to use the pivots indicator, trend meter. And that's about it. I think that's all you need. I think that's about it. So we have these indicators on the chart already. I'm going to go over here and put the requirements for the strategy. So this is the here, pivot scalp strategy. So one, confirm valid momentum signal. Confirm trend using pivots, trend meter, direction of momentum. Third, confirm price, retracement, pivots prior to momentum signal. Fourth, enter on close of momentum signal. Here, I'm going to change the requirements over a little bit, guys, because I mean, the requirements are right. It's just I'm trying to put them in order so that you guys know what to look for. Let me just start this over. So first, confirm direction of trend using pivots plus trend meter. Confirm price, retracement to pivots. Confirm valid momentum signal, direction of trend. Fourth, enter on close of momentum signal. TP stop loss set to 30/30 for preference. 6, that's about it. No avoid red flags for best possible trade setup. Okay, so this is a pivot scalp strategy. I just reordered things a little bit so that it makes more sense, just doing things in order. So this is the scalp strategy. Or it's with pivot scalp. 12.9.4. Okay, so the indicators you need are the momentum indicator, pivots indicator, and the trend meter. You can see over here we have these vertical lines, momentum indicator. The pivots are the 4 lines on the chart, and the trend meter is the meter down below here. So for step 1, you want to confirm the direction of the trend using the pivots and the trend meter. Again, like I said earlier, whenever price is below the pivots and the pivots are angling down and they're spread out, you can assume that the trend here is bearish. Another confluence to add in is the trend meter down below. If the trend meter is red, this means that the trend is likely to be bearish. Opposite, when price is above the pivots, trend meter is green. This means that the trend is likely bullish. So with that said, step 1, confirm the direction of the trend using the pivots and the trend meter. You can see price here is below the pivots, trend meter is red. This is going to identify as a bearish trend. For step 2, you want to confirm a price retracement to the pivots. So you can see over here, price was coming down, retrace to the pivots, price came down, retrace to the pivots, price came down, retrace to the pivots, right? It could be any of these setups here. It's just you have to look at these in order. So first you identify the trend. Second, you identified a retracement to the pivots. Once you confirm that, step 3, you want to confirm a valid momentum signal in the direction of the trend. So like I said earlier, you want to look at these in order. And that's why I changed the order here so that it would make sense. It's like a checklist. You're like, okay, confirm direction of trend, bearish. Confirm price retracement to the pivots, happen right here. Confirm valid momentum signal in the direction of the trend. We have a valid momentum signal right here for a sell. As soon as this candle closes right here, this is where you're going to take your entry for a sell, right? So again, everything here just flows, right? Because we have a bearish, and like the reason why the strategy requires that you look for the retracement is because you're looking for that pattern that I just mentioned earlier. You're looking for price to move directional like this. Like the thing is, you don't really need to look at all this criteria. The only thing here is like once you understand the criteria, like you're looking for a bearish trend, you're looking for bearish momentum, it's going to make sense because instead of drawing, lines like this, you already know it's happening right here. You see how price comes down, retraces up, comes down, retraces up. And the more and more that you guys apply these strategies, the more and more it's going to make sense and more efficient it'll be for you to apply these strategies. So again, step one, direction of trend is bearish. Step two, we have a retracement right here. Step three, confirm valid momentum signal, valid sell signal right here. Step four, enter on the close of the momentum signal, which will be right here. And then you're going to set your TP stop loss to either 30-30, or if you want to go for a 1 to 2, you can do that 30-15. And once you have that, you can set up the entry and let it run. You can see price kind of retraces a little bit, fills the entry right there. I'm going to go sideways for a bit. And then eventually it comes down and hits TP right there. So again, this is very similar to like the other strategy we applied. So the only difference here in comparison to the market flow V2 and momentum pullback scalp and breakout V3 continuation is that instead of waiting for the confirmation, because you could have waited for this red candle to close, right? If you waited for this red candle to close, that would be a breakout V3 continuation. Again, if you were looking for this here as a market flow V2, you could have waited for price to come down, retrace right here. This would be a market flow V2. If you wanted to take this as an MPS entry, price would have came down. When it retraced right here on this green candle, you could have set your entry right here. So like I said earlier, guys, you don't have to like master all of these strategies. If you just took any one of these entries right here, they all would have hit TP regardless of the fact, because the pivot scalp came up, the breakout V3 continuation came up, the market flow V2 came up, the MPS came up. They're all in the same area right here. So if you can just focus on one of these strategies, you're likely to hit your TP regardless of the fact. If you miss one entry, like say, for example, you missed the pivot scalp and you're like, oh crap, I still want to get into this position. When you get that red candle right there, you're like, okay, I'll get in later for a breakout V3. And if you miss these two entries here, you're like, okay, I missed both of these. Now I'm going to get in down here for a market flow V2 or for an MPS. And you just have like different opportunities there. So you don't have to like, if you miss the entry, just wait for the next one, because there's going to be an entry for the next entry anyways. You just got to be patient. So, all right, there goes a breakdown of the pivot scalp strategy. If there's any questions, feel free to hop into the chat. Otherwise, I'm going to move on to the next strategy, which is the high-low scalp. So I don't see any questions here. I'm going to move on to the next strategy. So let me go and just close this out. I'm going to replay to, say this candle right here. Okay, so we're moving on to the high-low scalp strategy. Again, like once you understand these strategies, guys, it's going to make so much sense. And you're going to, like, it's going to be a no-brainer for you to just focus on just one. Because again, this entry is going to line up with a lot of these other strategies. This high-low scalp strategy is going to line up with a pivot scalp and the breakout V3 continuation and like the other ones that we just covered. So here goes the criteria. So required indicators for high-low scalp strategy. So of course, momentum indicator, pivots indicator, trend meter, high-low indicator. That's literally it. It's like the same. That's why I just have all these indicators up at all times, because you're going to be using them regardless of the fact. So here are the indicators you need: momentum indicator, pivots indicator, trend meter, and the high-low indicator. These four. You don't need all of them, but it's going to be useful to have all of them on there. I mean, technically you do need all of them, but you can probably switch. You don't need the pivots and the trend meter. You actually don't need either of them, but this is going to help you identify the trend. So now we'll put the criteria over here. So high-low scalp strategy. So first you want to confirm price break and close past. Actually, let's start this way. Let's confirm the trend first. So confirm direction of trend using pivots and trend meter. Confirm momentum in direction of trend. Third, confirm price break and close past untested high low. Fourth, enter on close of candle. Enter on close of candle breaking. I'll just put close of candle. I don't want to confuse you guys. I'm just gonna select some look here. Trend. Candle breaking. Closing past high low. TP stop loss 30-30 or preference. No white red flags. Best possible trade setup. All right, so again, the criteria here is very similar. The only difference is the entry point. So looking at this here, step one, you want to confirm the direction of the trend using the pivots in the trend meter. Again, price is below the pivots here. So this is going to look like a bearish trend, right? Price is below the pivots, trend meter is red. You can assume that the trend here is bearish. Step two, confirm momentum in the direction of the trend. So right here, you can see that we have a sell momentum. So we're obviously looking for sells here because we have a sell momentum and a bearish trend. Step three, confirm price break and close past an untested high low. So I'm going to go over here real quick before this candle broke past it. And I will set a high low right here. So an untested high low is basically a high low that hasn't been broken and passed yet. Like right here, you can see this candle might have gotten really close to it, but it doesn't look like it necessarily broke and closed past it. This candle right next to it. So with that said, you have the criteria here. Step one, confirm the direction of the trend. It's bearish. Step two, confirm the momentum of the direction. It's confirm that the momentum is in the direction of the trend, which is bearish. Step three, confirm price break and close past the untested high low. So now you're looking for a candle to break and close past this level right here, right? We'll go over by one candle. And you can see this candle here breaks and closes past this lower low that hasn't been tested yet. So with that said, you have pretty much all criteria here met. Again, step one, bearish trend. Step two, bearish momentum. Step three, price breaks and close past the untested high low, which is right here. Step four, enter on the close of that candle. So when that candle closes, you enter right here for a short. Your TP stop loss is set to 30-30. Or if you want to have a 1 to 2 risk to reward, you can do 30-15. Again, the setup right there is all lined up. You let the trade run. You can see the trade is now active. Continues to move along. Go sideways for a bit. And eventually it starts moving in a direction. And you can see right there it hits TP. So again, very simple, straightforward strategy. You're just looking for the same thing that you're looking for in the other strategy. You're basically just looking for a directional move. The catalyst is just slightly different. Instead of taking entry off the sell signal, you're now taking entry off break and close past structure. So you have more of a confirmation. So like we said earlier, guys, you could have taken this as a pivot scalp. You could have taken this as a breakout V3 continuation. Now you could have taken this as a high-low scalp. And if you missed all of those three entries, you could still take it here for a market flow V2 or for a MPS entry. So with the same setup right here that we just looked at, there's about 5 strategies that came up. High-low scalp, that's 1. Pivot scalp, that's 2. Breakout V3 continuation, that's 3. Price came down, retraced up right here, that's an MPS, that's 4 entries. And then right here, if you look for price to come down, retrace to the pivots, that's a market flow V2. So that's 5 total entries within this short period of time right here. So you could have screwed up a bunch of times. Like you could have been like, okay, I wanted to take this pivot scalp, but I screwed up, I missed it. Okay, fine. And then you see this right here and you're like, oh, I screwed up right here as well. I was going to take this as a breakout V3, but I wasn't paying attention. Now price drops again below this lower low, and you're like, okay, now I could have taken this for a high-low scalp. If I screwed up on that, then okay, I'll take it for an MPS. If you miss the MPS, you're like, okay, I screwed up 4 times. Now I'm going to catch this for a market flow V2. So you could have screwed up and missed a bunch of entries there, but eventually another entry would have came up right after. And this is why it's okay that you only focus on 1 or 2 strategies, because they're going to line up with each other. If they all line up like that, you're going to have so much confidence to just take one of them, and at least one of them is going to hit. So there goes the criteria for the high-low scalp strategy. If you guys have any questions regarding this, feel free to hop into the chat. Otherwise, we have a couple more strategies here to cover before we wrap it up for the day. So we have a triple confluence, which is next. Triple confluence is basically, it's basically a high-low scalp and a pivot scalp combined. It's super straightforward strategy. The example is like literally right here. There's 2 examples right here. There's one right there and there's one right here. These entries don't come up as often, but when they do come up, they're pretty smooth. So let me go over here real quick. I'm going to take everything off. I'll just use this one over here because this is when the volatility was higher. I don't think there's anything else here. Yeah, because the volatility just wasn't very high today, so there wasn't very many opportunities for this specific strategy, but this is probably the best example that I can come up with. So, all right, guys, let's go over the triple confluence. Again, this is one of the favorites here because this strategy doesn't come up very often, and when it does come up, it usually hits pretty nicely. So same thing over here, required indicators for triple confluence. So 1, momentum indicator, 2, pivots indicator, 3, trend meter, 4, high-low indicator. And I think that's about it. Yeah, I think that's about it. The requirements here, triple confluence strategy. So triple confluence just means 3 strategies in one. Again, you can use these 3 strategies, or you can just create your own. If you're looking for a specific entry, just use 3 strategies. If they all combine into one entry point, then that'd be considered a triple confluence as well. It's just, this is the one that I created. It's more straightforward because, it's really super straightforward and simple. You're just looking for momentum to break and close past structure and then look for a continuation in that direction. So step 1. Confirm direction of trend. And you'll see a lot of these requirements are like literally the same thing. There's like not much different between the strategies. It's just, some have more confluences than others, some have less than others, some of them require different entry points for retracement, and some of them are just straight up following momentum. And that's just my style of trading, right? My style of trading is momentum trend trading. So I always look for entries in the direction of momentum and in the direction of trend. If those 2 line up, usually the entries are going to line up pretty nicely. So step 1 here, confirm direction of trend using pivots trend meter. 2, confirm price, break, and close. Or let's see, confirm momentum signal, candle break, close past untested high-low. I think that's about it, yeah. TP stop loss, 30-30. Set to 30-30 for preference. Note, avoid red flags for best possible trade setup. All right, so looking at this right here, guys, the strategy requires that you confirm the direction of the trend, right? The same thing we did earlier. Again, price here is below the pivots. The pivots are angling down. The trend meter down below is red. So we can assume that the trend here is bearish, right? You're just going to assume that it's bearish. That's going to be step 1. So step 1, we've confirmed the trend. Once you confirm the trend here, you want to confirm a momentum signal candle is breaking and closing past an untested high low. So right here, we have a higher low, and you can see this candle right here is breaking and closing past it, and it's also a momentum signal. This doesn't happen very often. You'll see a lot of times where price will break past high lows, like for example, over here, price breaks past it, but there's no momentum there, right? You can see over here that price breaks past it, but there's no momentum there. So when you see momentum breaking past it, this is like a 2-for-1 because you're getting price breaking structure. So you see prices moving that direction, but you also have a momentum signal. So you're getting price breaking past structure, plus you have momentum. So price is likely to push in that direction even further. So again, step 1, confirm the direction of the trend using the pivots in the trend meter. Price here is below the pivots, trend meter is red. Step 2, confirm momentum signal candle breaks and closes past a untested high low. So this high low over here hasn't been tested. No candle has touched it before. So this is the first time touching it and breaking and closing past it. And once you have that set up, you can now enter on the close. Let me just put this over here. Forgot to enter on the close of momentum. Solid momentum signal. I'll go over the requirements one more time. Just change it up a little bit. Well, not really change it up, but I just added the criteria there so you know where to enter. So again, confirm the direction of momentum using the pivots in the trend meter. You can see prices below the pivots. The trend meter is red. Step 2, confirm momentum signal is breaking past the untested high low. So this candle here broke and closed past this high low that hasn't been tested. Enter on the close of the valid momentum signal. So this is a valid momentum signal for a sell. You would enter a short position right here. Again, your TP stop loss can be set to 30-30 if you like, or if you want to have a 1 to 2 risk to reward, you can tighten your stop loss a little more to 15. Once you have that set up right there, you let the trade run. And you can see the entry there is filled. It's now running. And eventually comes down and hits TP down there. So there goes an example of a triple confluence. It doesn't happen very often, but when it comes up, it usually hits. And again, you can see right here, this lines up with other strategies. So this could have been a pivot scalp. This could have been a breakout V3 continuation for a late entry. This is now starting to set up for a market flow V2. If you want to enter right here at the 90 mark. There's a lot of entries here that they all pretty much line up. So, you know, if you just follow one of these strategies here, you can easily get one entry in per day for the most part. Sometimes you get more, sometimes you get less. You know, for this entry came up at 11, so I probably would have missed it because it's so late in the session. But if you want to be on the charts all day, you can find these entries. The main reason why I moved over to breakouts is because I don't want to be on the charts all day anymore. I used to be on the charts for like 5-6 hours a day. You know, it gets old and it gets boring. Like, yeah, I can make more profits doing this, but it also puts me at risk because since I'm looking for entries, the odds of me getting FOMO looking for these entries are very likely. So for me personally, I just don't like doing it. It's just not my style. It's just not like what I like to do. So, all right, that's pretty much it with the triple confluence. If you guys want to see another example, or if you guys have any questions regarding this, feel free to hop into the chat. Otherwise, you can see it's pretty straightforward. Almost all of the entries came up around the same time for all of the examples here. Because you can see they're pretty much all the same strategy. It's just different entry points. You know, we're looking for momentum. We're looking for trend. If you can find momentum and trend, you can find little entries in between each of these candles. And that's why my strategies work so well, because once you have that type of market structure, you know, you can take any entry and you can easily lock in a few trades there. Or 1 trade or 2 trades or 3 trades or whatever it may be. I covered 1, 2, 3, 4, 5, 6, 7. I covered 7 strategies already in this one little area. So there's about 7 entries that have came up so far just within this little area. So like I said, you know, if you can have the patience to wait for these entries, because you can see over here price is going sideways and then it finally comes down. If you could have that patience to wait for price to actually break out of this area, then you can easily catch a pretty solid entry in the direction of your trade. So, all right, there goes that. The last strategy I'm going to show you here is liquidity push. So let me go over here real quick, see if there's any setups here that I can see, which is it's gonna be a little hard because of the volatility today just wasn't very strong. Okay, so I think we could use. Here, let me step away for 1 second, guys. I'm just gonna go get some water and then I'll be right back. This is gonna probably take some time. I'll be right back 1 second. All right, guys, I'm back. So with the liquidity push strategy, this is like one of the favorites that everyone likes to apply. I know it's not the easiest one to apply because it's hard to really identify what's like good liquidity and what's not. But here, I'll use this as an example right here because this is going to help a lot with kind of identifying specific entries here. So the thing with this here is that I mean, some people just like using my tools specifically for liquidity because they just don't know where to mark up liquidity, right? The way that I do this is, so say for example, this is like the middle of the market. And in order to identify liquidity, all you're going to do is, and I'll turn everything else off here because I want your focus to be on the high lows. The high lows are literally going to show you where liquidity is sitting. So say, for example, you have an empty chart like this. This is what an empty chart looks like. If you want to look for liquidity here, just turn on the high-low indicator and you can see all of the, sorry, wrong tool. Turn on the high-low indicator and you can see all of the high lows that have not been touched yet, right? Basically, the ones that have not been touched is where liquidity is sitting. The only hard part about this is that you don't know like if it's going to be an actual liquidity push or if it's going to be a fake out. So you have to use confluences to identify, which direction that you're actually looking to take, because it's easy to get faked out with these types of entries. This is why I personally stopped taking liquidity pushes, because the thing is the market's so volatile and it's so unpredictable that, I mean, you can get lucky, but a lot of times you'll get unlucky. So I think this strategy works well if you use a proper risk to reward. So I would say use a positive risk to reward for this specific strategy. Sometimes you're going to have losses here and there, but it's fine. Eat those losses when they happen. But when you have those wins, they're going to balance out. When I used to apply this, I would do it with a negative risk to reward, and I would get lucky. Well, I wouldn't say I'd get lucky. I would hit my trades, but when I would take losses, it would hurt because then I would have to get like 3 more trades to bounce back. So this is why I personally don't like using it, but I know some people, they're liquidity traders. That's all they want to trade. For me, I'm not a liquidity trader, but I can show you how to identify liquidity. So the way to do it is, say, for example, you have a chart like this, you just turn on your high-low indicator. What you're going to do here is you're going to draw lines at these high lows that have been untested. So, for example, you're not going to draw a line right here, right? And why wouldn't you draw a line right here? Because this has already been tested. So it's no longer liquidity. It's already been touched. It's been broken. So you're going to draw, you can basically go from top to bottom. So starting from this higher high right here, I'll draw a liquidity right there. You can see it hasn't been tested. Now, next one is right here, hasn't been tested. Next one right here hasn't been tested. I'm not going to mark this one up because it's already pushed to that point. So it's been tested already. Right here, untested. Right here, it's been tested. Not going to mark that up. Mark this one up because it's tested or untested, sorry. Now we've marked up the highs, right? Now we're going to go down to the lows. I'm not going to mark this one up because it's already been broken. It's been tested already. Untested, 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 tested. I'm not marking these up. So with that said, now that you have these marked up right here, and this is going to be a problem applying this strategy with say prop firms, certain prop firms like for Tradeify, because with Tradeify, they require that you hold on to a position for at least 5 seconds. These trades are going to hit your TP right away. They're just going to spike to your TP. So this might be a problem with certain prop firms. If you are trading prop firms with Apex, it hasn't been an issue. Jamie's with Apex and she's got her payouts and she's been doing fine. This is all she trades. But again, with like other prop firms, some of them have requirements. They call these micro scalping. They just don't want, they don't like it because it happens so fast and their accounts aren't able to copy it. But you know, again, this is a great strategy if you know how to use it properly. So looking at this here, this is how you're able to identify liquidity. The reason why these are liquidity is because whenever people enter sells here, where do they place their stop loss? So say, for example, if someone's entering a sell right here, their stop loss is going to be at the swing high, right? Which is right there. Say, for example, someone enters a sell right here, right? Where's your stop loss going to be? It's going to be at the swing high. If they entered a sell from right here, where's your stop loss going to be? Swing high, swing high. Enter from right here, where's your stop loss going to be? Swing high, right? So you're just using logic here. You're kind of looking to see where people are placing their stop losses, and then vice versa. If people are entering buys right here, like say, for example, price pushed up, they enter a buy right here. Where's your stop loss going to be? At the swing high, right? Which is right here. Again, price pushes up right here, they enter right there. What's your stop loss going to be? Swing high or swing low, sorry, the opposite direction. So when people are entering sells, they're placing their stop loss at the swing high. When people are entering buys, they're placing their stop loss at the swing low. So basically you're looking for where stop losses are sitting. Stop loss is sitting up here. Stop loss is sitting down here. And then this is where your analysis will come into play when to identify which direction to be trading in. You can trade in both directions, but for the most part, you kind of want to have some sort of confluence to identify the direction of price. So again, I'm going to turn on all the indicators again so that you now see where everything's at. I'll put the required indicators for liquidity, push, momentum indicator, pivots indicator, trend meter, high-low indicator. That's pretty much it. Once you have that, I'll put the criteria here. So liquidity push strategy. So for the liquidity push strategy, first you want to mark up all untested high lows, confirm direction of trend using pivots and trend meter. Third, confirm direction of momentum using, or you don't know any details there. Confirm direction of momentum. Look for entries in direction of both trend and momentum. Set pending orders at untested high lows. Liquidity, also known as liquidity. TP stop loss. I mean, there's a lot of different ones you can do. TP stop loss set to 30-30, 15, 15, 10-10, or preference. I mean, there's a lot of different ways to do this. Preference. White red flags. Best possible setup. Okay, so looking at this right here, we have all the criteria. So first, not market. And let me put this right here. Liquidity push 12, 9, 24. Okay, so with that said, first mark up all untested high lows. So I've already marked that up for you guys here. These are all the high lows that have been untested. They're all fresh and they're ready to get hit. Also known as liquidity. Second, confirm direction of trend using pivots and trend meter. You can see here price is below the pivots, the trend meter is red. So ideally you want to look for sells here. Third, confirm direction of momentum. You can see we have a sell momentum right here. So we're probably gonna be looking for some sells. Now you're gonna look for entries in the direction of both trend and momentum. So the trend and momentum here is bearish. So obviously you're gonna be looking for some sells here, right? So what you care about is down here. You don't really care about the liquidity up here right now because the trend here is bearish and the momentum is bearish. So once you have the setup right here, you can see the closest level is right here. A lot of these work best when they're bunched up. So you can see how these are bunched up right here. I would probably take one of these instead of this one down here, because when they're bunched up, typically there's going to be a lot of stop losses hanging out around there. And then when they get hit, they're going to blast right through. So with that said, we have this set up right here. Again, you want to set up your TP stop loss pending right there at that specific price point. And the good thing about this is that when you mark up the untested high lows, you'll have the price point right here, 44,589. So you can have a sell order just hanging out right there waiting. And the most common one that people use is 15-15. I think 30-30 is a little too far out for a trade like this. 15-15 probably works best. So now that you have your pending order just waiting right there, you're looking for price to push down and trigger the liquidity. Once the liquidity gets pushed, you're going to hope that, or you're not going to hope, but you're going to anticipate that price is going to blast right through and hit your TP. So let's move on to the next candle. You can see that price pushed through right there and it spiked down. Depending on where your TP stop loss is, this could have hit your TP already, or it could have been pending, or it could have been active right now. So you can see price here kind of moves back and forth. And eventually it blasts right through. So that's the whole logic behind liquidity push, is that you're basically, what you're doing, you're just stop loss hunting, right? A lot of people always say stuff like, oh, I took this trade and I got stop loss hunted. Like that's literally what's happening, except you're trading opposite of them. So if people are taking buys right here, you're trying to hunt their stop losses because their stop losses are down here. So this is how you would enter the liquidity push. There's different ways to enter it. So like, for example, here, you could have entered right at that price point. The way that I would personally do it is I don't really like setting pending orders. So if I saw a sell signal like this come up, and I'm like, all right, cool. I see the sell signal come up. I would just enter a sell order already. So I would enter a sell market order right here because I'm already expecting price to come down and knock out these orders, right? But that's just me, right? Because like for me, I don't like setting the pending orders because what happens sometimes is you set the pending order right here. And then what happens is it triggers it and then it reverses on you. And I'm like, damn, I got in for a horrible entry right there. So what I like to do is I like to get in even earlier. This might be considered riskier to some people, but for me, I feel more comfortable taking trades like this, where price is getting close to the liquidity and I just get in right away right here. So I get in for a bit of a discount and then price comes through right there and then it hits my TP right away instead of waiting for me to get filled down here. And like I said earlier, you could enter right here, you could enter right here. Doesn't really matter because either one would have gotten hit. However, if you entered way down here, this is where it becomes tricky because price tends to reverse. And there, see how you get stopped out right there? This is where you get faked out because you get in too late. So I wouldn't mess with anything down here. I would get the ones that are bunched up. So looking back over here, like I wouldn't mess with this one right here because it's by itself. But I would mess with these up here because they're bunched up. Because if price blasts through here, it's probably going to push right through to the next level right there. So as you guys can see, this is a very lucrative strategy because there's a lot of liquidity that's all over the place. I mean, if you go back, so if we go back to say, I guess we go to the market over here. So same thing right here, right? If we mark up untested liquidity, so I cleaned up the chart. Let's do the same thing over here again. So let's just go and mark up all of the untested high lows. Like this is a very lucrative strategy, but you have to be really smart about the ones you decide to take because it's really easy to be on the wrong side of the market, especially when the market's going sideways. This works better when the market's moving directional, but today market was moving sideways. So of course it's gonna be a little tricky. Okay, so same thing right here. Which direction would you guys take? Price is below the pivots, the trend meter is red, pivots are angling down, momentum is here for a sell. I'm not going to look for buys here because everything here is pointing towards a sell. So why would I look for a buy? I'd look for a sell, right? However, these liquidity points are all strong, right? We have a bunch of liquidity hanging out right here. We got a bunch of liquidity hanging out right here. I would stay away from this liquidity because it's by itself, and I would stay away from this liquidity because it's by itself. However, these right here are good, but I wouldn't take a buy because the trend here is bearish. So again, same situation right here. If price comes down, I'll be looking to take my entry, like say right there. Take it again for 15.15. Price comes down, blasts right through, knocks out liquidity right there. So you're just trading with logic, guys. Like, liquidity is not very hard to trade. It's just, you got to be smart. You can't be taking dumb trades. Like, obviously, I'm not going to look for buys here. Why would I look for buys? The momentum is bearish. Like, there's no reason for me to take any buys here. So this is where it comes into play, where you can actually use different tools to help with your analysis. So if, say, for example, you're taking entries right here and you're looking at order flow, right? So I said before, like, order flow here is very useful because it's not required, but it's useful because, so this candle over here was at, let's see, 741. So let's just go over here to 741 real quick. Like, you don't need order flow, but if you do have order flow, it'll help you really identify. So let's see, this candle right here is at 742, right? 742 is like right here. Once you see like this bigger candle come down at 112, you're like, all right, price is probably gonna drop from that point. So we move over by one candle here. And you're like, all right, price is probably gonna continue dropping because we have all of this order flow here identifying that price is likely to keep dropping. So this is where you can use things together as another confluence to identify, okay, price is probably gonna keep dropping, and I can keep taking sells even deeper. Or what you can do here is you don't even have to like what you can do is you can just look at liquidity here. This is at the 743 candle. And then if you see confirmation of price continue to drop, like you have a big delta right here for negative 112, negative 96, negative 164, then you could even enter a little farther down here and just ride this down even further. So, like I said, these tools here that I provide to you guys, you can use these for a lot of things. You don't have to use them for my specific strategy, but you can use them to confirm a lot of things. Like you can use the momentum to identify direction of price. You can use the trend to identify direction of trend. You can use the high lows to identify reversal patterns. And then if you use this in confluence with like order flow, this works hand in hand because you're looking at price dropping past structure or liquidity, and then you have confirmation of like strong delta here for a sell, and you can just ride this wave down further. So instead of getting in like say for example, you missed the whole liquidity push, right? Say liquidity push through here and you're like, oh crap, I already missed it. You're like, all right, now look for the confirmation here. If the confirmation shows that the delta is still pretty strong at this point, you're like, all right, I can still enter down here and still feel okay about it. Because you would have entered the trade late there, and then you're now in the position and it drops down even further. So it breaks past your TP right there. So there's a lot of different ways to do this. Again, it's just really up to preference. But again, it's pretty straightforward as well. So, all right, guys, I think that's it for the directional strategies. Today we covered strategy types, directional strategies, sideways strategies, breakout strategies, and then we covered pretty much all of the directional strategies here that we mainly use. Market flow V2, MPS, breakout V3 continuation, V1 variation, pivot scalp, high-low scalp, triple confluence, and lastly, liquidity push. So I think that's it for the day, guys. If you guys have any questions, feel free to put them in the chat right now. Otherwise, we're going to wrap this up. We've been on this session for about 2 hours now. But we covered a lot of information here. So, with this information, the replay will be live for you guys and will be available for you guys to replay. This is a good refresher. So moving forward with the rest of this trading month, you guys will understand what to apply, what to focus on, what's necessary, what's not necessary. It'll help you make an educated analysis of like what you want to take when you're trading throughout the markets, because there's so many different things that you guys can use. It's just really up to you what you want to use it for, right? I showed you guys all the strategies here. There's not one way to trade. There's so many different ways to trade, and there's so many different entries to take. But if you could focus on like one or two things, like I showed you guys earlier, there was an entry that happened right here. There was about 7 entries that happened within a 10-minute period. So you could have screwed up and missed a bunch of the entries, but if you took one of them, either of them would have hit. So All right, guys, I think that's it for the day. If you guys have any questions, feel free to reach out. We've pretty much covered, for the most part, everything that was necessary for the directional strategies. Of course, there's more directional strategies to take, but I just covered the main ones that we typically apply during the live session. So I think that's pretty much it. And with that information at hand, you guys can go and back test and try things out. Let's see. Talanji said I still use the higher time frame snipes for Confluence, but they go with most of these. Thanks for a good session. Yeah, definitely, Talanji. Like Talanji said, he likes the snipe strategy. I didn't cover the snipe strategy today, but that's like one of the classic strategies that we applied in the past. Talanji uses it on a higher time frame, and then he can go from higher time frame to smaller to identify these smaller entries that happen in between. So, Talanji's been with us for a long time. He understands this stuff inside and out, and having these confluences here help. So again, today we covered directional strategies. Next week we'll cover sideways strategies, and then we'll cover breakout strategies probably that same day. We're at day 3 right now, so the next session is gonna be day 4. We'll probably have another day 5 and day 6. For those next days, we're gonna cover sideways strategies, breakout strategies, and we'll cover risk management, trade psychology, and then lastly, how to trade like a business. I'll be covering basically how to, write off taxes and stuff like that, and how to start a business and how to get everything in place so that you can start to write off things and deduct things from your tax liability. Because once you start to make profits trading, that's the one thing that I learned. Once you start to make profits trading, you now have to learn how to keep those profits, because it's not really how much you make trading, it's how much you keep at the end of the year. Because you can make 100,000 trading. If you don't know the tax game, then you're going to pay like, 40% in taxes. So, I'm going to try to help you guys as much as possible to show you guys what you guys can do to minimize that tax liability, like buying specific things for the business, paying for subscriptions, stuff like that. All that stuff is deductible. So we'll cover that over the next couple of days. But again, today was a great session, covered all the directional strategies. And if you guys have any questions, always feel free to reach out, guys. I'm doing this completely free to help you guys out. This is just my way of giving back to you guys, because there's no way I'd be in the situation I am now with my trading and at the level I'm trading in now without having you guys to support and you guys to teach. Because obviously me trading live every day has made me a better trader, and this is just my way of giving back to you guys pretty much every year. I do this mentoring thing every year around this time, and after this is done, I pretty much kind of disappear from mentoring for a while, and then probably at the end of the year I'll mentor again, maybe for a couple of days or a couple of weeks. But all right, guys, I think that's it. If you guys have any questions, feel free to reach out. Otherwise, I will see